Recently, PayPal reported better than expected Q4 earnings and revenue. However, the stock gapped down. This is good news and bad news. This is the monthly chart, and as you can see, price in recent months is coming off that monthly buyer's level at $52 that was formed back in June, all the way in 2017. The form was zoned by you had a rally in price, a basing candle, and then the rally out. Rightfully so, as price came down, came right into that level, and saw a nice pop up in price. Now I do have a $75 target. However, the news this week did not help the cause. However, there is good news. Price is at a level which suggests one can go long now. Before we continue with the analysis, before we look at the levels, let's get into the earnings. So for Q4, the financial services giant posted earnings per share of $1.48, topping the estimated $1.36. The company's revenues for the quarter reached $8 billion, surpassing the consensus forecast of $7.88 billion. The total payment volume for the quarter was reported at $410 billion, marking a 15% year-over-year increase and above the projections of $404 million. Regarding active customer accounts, that slightly declined, just below the forecasted 428 million customer accounts. Here's what Jefferies, which is a Wall Street analyst, had to say about the earnings. On one hand, the outlooks for gross profit and EPS should provide a floor for fiscal 2024 estimates, a prudent move. On the other hand, there is risk in committing to invest heavily behind efforts to fix problems, namely branded checkout market share that we believe, may be irreparable, and the shift to non-GAAP EPS, including SBC, likely lowers the ceiling for the stock in the near term. Rich valuation relative to growth, analyst said. Here's another analyst with research. They believe the guidance is likely conservative. However, despite this, PayPal remains a show-me story. While we see some conservatism in the guidance, we believe that PayPal remains a show-me story pending execution of strategic initiatives. All right. So with that said, this is the weekly chart, and let's blow this up a little bit. There was two levels. You have a rally, a base, and then a rally out. You have the basing candles and the rally out. So you have a level one level. Rightfully so, price went through the first one because the leg out of this zone was not strong. As you can see, we had a leg out, but then you have basing candles, right? Typically, you want to see a leg out being at least 3x the zone. That could be consecutive candles or one green extended range candle. Nevertheless, rightfully so. Now, what's powerful about this is that this is a level on a level. So we have the Super Bowl in a couple of days. Consider this your offensive line, and this is your quarterback, right? So your offensive line protects your quarterback, meaning you have buyers here and you have sellers here. So the buyers and sellers duke it out at this level. So by the time price gets to the lower level, there's really no more sellers. Or, to put it another way, the buyers overwhelm the sellers, and that's why we're getting this little bounce back. All right, so let's take this off and go down to the daily chart. All right, so you had a gap and go on Thursday, and now you have the buyer stepping in at this level here. So the chart suggests to go long. At least look for price to fill that gap. Again, my target is $75. Let's see what happens over the coming months. Thanks for watching. Subscribe. Please like the video.